online collections technology think tank. My name is Colin White and I'm from Credit Connect. I'm here introducing the next session of the day, which is not affordability that you can see on the screen. It's actually open banking in collections. This session, we are going to be looking at open banking in collections. But before we get going, I just wanted to give everybody a bit of background to the event and how they can interact. So on the left-hand side, you've got an I information button. Please have a look at that. It's got information on the event and how to sign up for our next session, which is going to follow this on business transformation. The important section on the screen as well is we've got a bubble, a question bubble icon. So if you click on that, you can ask questions throughout, and we welcome those. Also, we've got some polls that are going to run across the screen throughout this session. So if you can get interactive with that, that'd be fantastic. They're anonymous. We don't share them. We will share the results in our post-event write-up. So have a look out for that. That'll be next Thursday on our website. So we'd like to get you involved with that. And then also we've got a section on information on our sponsor, is Paylink Solution. And then we've got some resources where you can download more information which supports this event as well. So that's where we are with how you can be part of today's event. So what I just wanted to fill you in as well on an update on this. So I wasn't originally going to be chairing this session, but I've been jettisoned into the role. Unfortunately, Vanessa Northam from StepChange is unable to attend the session. She's been battling a sore throat and earache, so we hope you get better. But I'm going to resume the responsibility of chairing the session, so hopefully it all goes well. Right, so let me start by introducing all of our panelists, and if they can give us a bit of background. First of all, let's start with, we've got Tom Feest from PSA Finance. Tom, if you could give us a bit of background about yourself, that'd be fantastic.
Yeah, thanks, Colin. I'm Head of Collections and Recoveries for PSA Finance, as you can see on the screen. PSA houses the Peugeot, Citroën and DS brands. So I'm responsible for the entire motor arrears book for PSA Finance UK. So responsible for the entire collection cycle. So I have responsibility for the an early arrears operation in Poland, a later arrears operation in the UK, recoveries operation, a vulnerability department, a B2B unit, and an outsourced panel of 25 units. So responsible for the entire journey as our customers move through the arrears cycles. Prior to that, I had 13 years in senior management positions for Lloyds TSB, managing their early arrears, late arrears and recoveries collections units. I've also had 5 years as a senior litigation manager for a debt purchaser. So I've worked in collections and recoveries, sadly, my entire life, since 18 years old, so 23 years and counting.
Wow, brilliant. Thank you, Tom. And Angus from Credit Kudos. Angus, if you could give us a bit of background to yourself.
Of course. Hi, everyone. I'm Angus Clacher. I'm the Head of Product at Credit Kudos. And my previous roles were with Citibank and BNP Paribas, and more latterly, the fashionable fintechs, Ariel and Modular. Here at Credit Kudos, we're an open banking credit reference agency. So we've got just over 100 lending and collection clients, and we use open banking to provide credit and collection information, including income verification, affordability, credit scores, risk insights, and we do it through a dashboard for manual workflows and at scale via our API. So that's me.
Brilliant, thank you. And hopefully, got my fingers crossed here, is Andrew Alder. Are you with us, Andrew? Shouting into the...
I am, Colin. Can you hear me?
Yeah, it didn't echo. Nice, brilliant. So you are here, brilliant. Thank you, Andrew. Andrew, as the joy of running a technology event and talking about technology, we've come up with a couple of barriers today with a couple of our speakers, not just Andrew. So apologies that you can't see him, but he's very much here. Andrew, if you could give us your introduction, please.
Will do. Thanks, Colin. It's very ironic, isn't it, having these technology problems being a technology provider. But yeah, Andrew Alder, current role at Paylink Solutions is leading our service proposition in collections, debt advice and lending through a range of products that help these sectors provide a digital journey and I guess equip their agents, their underwriters, their debt advisors access the same functionality when supporting customers through a traditional telephone journey as well. So we've seen around about 30,000 collections affordability assessments going through our Embark platform a month, and around about 5,000 to 8,000 of those every month have utilised open banking data. Previously worked at Paylink, Paylink's sister company PayPlan, one of the leading free debt advice, consumer debt advice organisations. And I guess with today's topic being on open banking, I thought I would share some nostalgia that sticks vividly in my mind of when I first heard of its concept without realising what it was or what it would become. And it was while I was working at Northern Rock during the financial crisis. We were supporting UKFI, who were responsible for managing the government assets at the time, and the FCA were very concerned that Bradford and Bingley would have the same experience as Northern Rock and have a run on the bank, because they were struggling to put together a rescue package. And the immediate concern was on their retail banking part of the bank and how quickly could that other financial institution step in to take it over. Mm-hmm. And I remember during these conversations, it discussed and explored the concept of customers giving their consent for open banking account information to be able to transfer to another bank. So you can see where I'm going with this. So obviously history tells us Abbey National took it over and remained on a legacy system until a traditional migration. But these early conversations back in 2008 were not forgotten, and apparently with the genesis of open banking and the subsequent EU directive that came into play around 2009 to help with increased competition. So in these meetings, early concept meetings of open banking, it definitely wasn't referenced as open banking. I think it was referenced something as consent digital or electronic bank account migration, bit of a tongue tie. So there's a bit of a potted history on some of the early discussions around open banking.
Oh, good. It's the anniversary, isn't it, Andrew? The other day, how many years is it? 3 or 4 years or something like that now of open banking. But
yeah, it's a long time ago.
Yeah, exactly. And mine. So yeah, no, I just wanted to see, and we'll start with you, Andrew, if that's right. Have you seen like a utilisation of open banking? Obviously, and this is just my view, and that open banking has always worked for lenders. You know, you have to look at mortgages and things like that. It speeds up the process. It seems like a real no-brainer in some ways on that side. But from collections, I know having attended an event last week at CSA, is very much a barrier goes up around collections and how successful that can be. So I don't know if you've got any thoughts on that.
Yeah. I think the value exchange for open banking and lending is much more clear, but we are starting to see what the value exchange is and could be for collection. So I guess it's basically two trends during the pandemic in terms of consumers and lenders wanting to utilise it. I think first and foremost during the pandemic there was a significant increase in the adult population setting up online accounts, which obviously it's a key component for open banking to be accessible and successful. We've personally seen around about 15% increase of open banking adoption over the last 16 months. And primarily what we're seeing in terms of behaviour is people are accessing our solution on their mobile device. And I think with things like biometrics now being well embedded in that journey, it's really helped increase those adoption rates. Mm-hmm. And then again, I guess as an industry, we've seen a huge growth in consumers setting up more than one bank account, especially with the neo banks having a main account and maybe having a subsequent account in the household. And what we've started to track very closely is when customers in collections are accessing open banking, how many bank accounts are they selecting? And what we're seeing right now is around about 45% of all open banking budgets being created have selected 2 or more accounts. And if we look back over 12 months ago, that was around about only 20%. So again, that for me tells us that consumers in collections are getting confident and comfortable using open banking and are willing to really share all of their bank account information. And then I think from a lender, a creditor point of view, if we go back 12 to 16 months ago, there was a huge demand in the industry to digitalize affordability and integrate open banking into that. And it's not surprising with the backdrop of payment deferrals, firms getting used to staff working from home, lenders were looking for capacity release valves to improve the technology and the experience for the customers, but as a release valve for them as well in terms of all the payment deferral customers they had. And I think right now, I mean, I'm aware of personally sort of like 5 RFPs in the industry where open banking is a key component in those RFP for collection. So we are definitely seeing that increased demand across in terms of lenders wanting to have that process within their collections journeys. And it's one of these things, for adoption to get where it needs to be, it's got to be available for consumers to use it. So, if you build it, they will eventually come. So I guess that's what we're seeing at the minute.
Okay. And Angus, any different view or similar view?
Well, I'd echo those comments. I think the numbers are starting to come through. We've passed 3 million consumers using open banking back in March of 2021. It's doubled every year, and just as Andrew said, basically it's being driven by people using desktop and mobile banking, and app redirection and the use of biometrics basically made it very easy for consumers to do it on their phone. There's a bunch of smart people who reckon we might hit 5 or 6 million consumers by the end of this year. And that's going to be the strategic tipping point. After that, you're looking at mass adoption. Jumping over to commercial lending, UK banks lent 54 billion into SMEs in the 9 months of 2020. Some of our customers in the SME origination space include Atom Bank, and their plans included, putting out £1 billion in loans to small businesses, and the next problem is collection, and that's all coming in right now. So it's a very exciting time for OB, and I don't think it's a situation where we're having to tell people about OB now. It's more where we're working in detail with them on their use cases.
Mm-hmm. And Tom, what's your experience as well? I guess from a business that's very different to Credit Kudos and Paylink.
Yeah, I mean, I'll speak from a PSA perspective. I mean, we're fortunate enough to have the open banking affordability assessment tool embedded in our collections processes for 2 years now. So we, as the rest of the industry, had a very onerous manual affordability assessment process prior to utilising the open banking tool, which was an SFS financial statement, which was a horrifically large Excel spreadsheet, which our agents would have to go through with our customer base over the phone. When we needed to assess affordability in the collection cycle to offer them a suitable outcome or solution. It was onerous. It was taking 15 to 20 minutes per conversation. It was unreliable because obviously relying on the customers giving you accurate data of their incomings and outgoings. And on occasion, we'd need to request that our customer base would submit bank statements just to verify the income and expenditure details they've given us, to ensure that if we're conducting a restructure of a contract, a repayment plan, a promise of payment, that it was the right outcome for them. So we had a very onerous process. The customer journey wasn't great. So when we heard about the open banking functionality, we're very excited to try and automate that affordability process. So we partnered with a third-party provider and built, in essence, an SFS financial statement, which populates automatically from the customer's transaction dashboard, whereby you could select a date range, and it will populate within minutes after consent being given, and demonstrate a surplus or a deficit, or generate conversations around spending habits and so on. So that's a project that I ran 2 years ago. Huge nervousness from my perspective around consent volumes. In terms of the tool looked great, we're confident that it worked. It was an FTE saving, which was great, but obviously it's only going to create that saving and improvement to customer journey if the customers give us consent. But I'm really surprised with the take-up rates, far greater than ever expected. Obviously, a lot of that's to do with how you position it to the customer in terms of the benefits of the consent being given. But yeah, I mean, it's been really groundbreaking for us in terms of assessing customers' financial position quickly. Secondly, highlighting potential vulnerability, which I'm sure will come through. Thirdly, improving the journey and reducing the FTE on investment in affordability assessment. And lastly, I suppose we've seen an improvement in terms of kept rates. So the propensity to keep from the solutions we're offering using open banking data is far greater than that using the old manual version. So that project went live for me about 19 months ago. As I think Angus alluded to at the beginning of the call, the volume of take-ups in percentage of our portfolio, of course, it's all relative, increased greatly during COVID. Certainly, when we're looking at the possibility of setting secondary payment plans, or secondary payment breaks, sorry, as per the FCA guidance. So we saw a big spike in sort of June to October last year. That's tailed off now, obviously, as the guidance has changed since the 31st of October. So, yeah, that's the journey we've gone through in terms of a transition, I suppose, in terms of our affordability assessment process from manual to the open banking solution, which has been a positive journey for us so far, is now embedded in our processes. So I can't see that changing for the foreseeable future.
Wow, interesting. And I guess on that note, it's hard, but have you seen any particular trends that have emerged with the use of open banking across the pandemic?
Well, like I said, it increased because it had to. Because obviously the proportion of our customers on payment breaks multiplied 100-fold during the pandemic. Wow. So the initial payment break was obviously offered as per the guidance without any affordability assessment. When we had the guidance in terms of a tailored solution for a secondary payment break, we made a decision, where possible, where required, to assess affordability of our open banking before processing that secondary payment break. Not for every customer, because it wasn't always relevant. But when we went through that process, when the first batch of payment breaks expired and a percentage of those cured, but a large percentage wanted further assistance, that's when we saw the increase in utilisation of the tool and consent volumes.
Okay. And Angus, any kind of trends that you've seen at all?
Well, in addition to the points that have already been made, I guess we saw lenders and collection people interested in which employment sector a person was in, and we were able to supply that via OB. Lenders are obviously always super interested in what recent borrowings a person has made, but in the collection space, you're looking at recent borrowings, income shock, return direct debits, stop payments that they might have made in other areas, and all of that data is available through OB and is surfaced as indicators. And and as alluded, I think that the main use case for collections is the automation. If you send a customer on a consent journey, you can have the I&E performed in sub 10 seconds, and that just dramatically accelerates the ability to work with people and frees up the agents to have the quality conversations rather than the laborious ones of collecting a consumer's information. It also gets to the truth a little quicker as well.
Great. And Andrew, anything to add to that?
No, I would agree. What we've seen as well, feedback from our clients is not only, is the adoption rates going in the right direction. Again, it's good that we're getting the consistent message back. Tom's alluded to there that the long-term sustainability of arrangements made with open banking data outperforms non-open banking affordability assessments. We see the same. We typically see them being around about 7% higher. And what we've also started to see as well, when you look at the disposable income customers have on an open banking budget versus a non-open banking one, and this does depend on the client and the type of product, but it ranges between £15 to £35 more on disposable income after an open banking budget's being used versus a non-open banking budget. And I guess there's probably two things there. There's behaviour. I think a lot of customers probably overestimate how much they spend on things when they're trying to do this themselves. And I think what does play quite a big role is that the accuracy of open banking, it's very accurate to the penny, whereas I think a lot of people, where they are trying to be accurate, they will round things.
You still there, Andrew? No. Okay. Don't know what's happened to the line there. Apologies, everyone. Okay. We'll move on to something else. So I was going to say, obviously, Angus, you've seen quite an increase in demand for organisations to implement open banking. Has there been any sector-related trends, would you say, that you've come across?
Well, I guess different parts of the origination and collections industry are doing different things. So brokers are adding OB data to the information that they hold on consumers in order to pre-approve or to segment their customers so that they can offer credit cards, unsecured personal loans, and other products from their lending panel. Lenders are using it to write more loans. They're also using it to learn about their competitors and the spends of their consumers. They're using it to increase the limits of the credit that they offer. And obviously, in addition to splitting risk, they're finding that they can use OB to reduce defaults. Collection agencies, I think the case has been well made by our other speakers today. It's basically about automating the collection process. And what you're seeing is a bunch of companies coming to the fore who really are spending a lot more time on creating a customer-centric collection experience and using OB to automate the IE. And that makes it much nicer for a consumer. It doesn't have to go and face somebody potentially and go over their figures. You can have a largely automated journey and get your agents involved for the more valuable parts of the discussion.
Okay. Andrew, when you think of, obviously you're using open banking and adding value to collections process in particular, is there any angle there for vulnerable customer? Obviously, INE is prevalent, but any area where it's helped with your experience with vulnerable customers at all?
Who's that question to, Colin?
Sorry, for you.
You said Andrew.
Sorry, I meant Tom. Apologies. Yeah. Sorry, Tom.
Of course, yeah. I mean, and that's obvious thing, I suppose, in terms of using true transactional data to very quickly highlight a deficit. You can see whether a customer is experiencing extreme hardship very quickly. You can see from the transaction categories whether priority bills are being maintained or not, and whether we should be signposting to free debt management advice agencies, which is the standard route, I suppose, in terms of vulnerability. But also something else we've noticed as well that's helped us with highlighting potential vulnerability with customers that maybe aren't disclosing immediately. It's just the categorization of transactions. We, as I'm sure every other supplier does, will categorize the transactions into groupings. I'll give you one example. We'll have one that's gambling. We have some customers, very few, that may be in arrears with their priority bills, but you may recognise that there's quite a high outgoing in categories such as gambling, whereby that obviously breeds a very different conversation in terms of further assistance, signposting and help. So yeah, I think that the surplus versus deficit is the most obvious in terms of highlighting hardship. But the categorization of the transactions and those payments that are being missed, all made in certain examples, can also help highlight potential vulnerability and make sure that our agents are able to have a very different type of conversation with that customer.
Okay, that's great. And anything from you on that particular angle, Angus, in terms of the data segmentation, I guess, is where we're looking at it from a vulnerability perspective?
Yeah, well, I think what's great about these software solutions is that we can flag vulnerable borrowers in a systematic, repeatable, and auditable way. And we watch out and have flags for recent borrowing, high cost short-term credit, gambling, high cash use, return direct debits, stop payments of various kinds. So you really do have a really repeatable way of working with your customers, and we do our best to ensure that the customers are being provided with a plan that they can afford, and if you're playing back their own transactional data to them, I think it's a much better conversation.
Okay. And Andrew, I don't know if you can hear us. And okay,
I can. Yes. Sorry about this.
That's okay. I feel like we've got experience within your office. Did you catch that question at all about data segmentation and identifying vulnerability?
I didn't, but that's enough. That's all I need. So yes, okay. I think like Angus says, there's loads of different data endpoints that you could turn on with open banking, and I think a lot of them are being used in lending from an underwriting perspective. And a lot of those, I guess, those data points are very transferable for collections. And I guess it all comes back to how do you present these things to debt advisors and to agents as well. But I do think that there needs to be probably more industry thinking around what type of other data insights does collections and does debt advice need that might not be as useful in lending. And I think there's a lot of work there. But there's a lot of information you get on transactional information, which may pinpoint that there's a vulnerability problem, an underlying vulnerability problem there with a customer. I think right now, probably Tom's probably got a different view. He might be a bit more advanced in this space, but I guess in our clients, it's very much they're quite happy with just the open banking data, pre-populate an SFS budget. Where I think the industry needs to go to next is taking advantage of those data insights, using those data insights, and also training staff on how to use those data insights as well. I think that's going to be a new skill set for staff in collections, which, that skill set exists in underwriting today and has done for a long time.
Okay. Just wanted to get an angle as well from Tom on open banking and how your company might use it in the future. Any thoughts on that, Tom?
Yeah, I mean, okay, I can only speak from a collections and recoveries perspective, because acquisitions is a different subject completely. Though there's obviously a lot of traction with that as well. I mean, in terms of the future, I suppose we're going to move with the times in terms of how the open banking data available progresses in terms of increased functionality, etc. So it's very much embedded in our process now. The take-up rates are very high. Our agents' population are comfortable using it. Our propensity for kept repayments or customer solutions is high. So I see no reason why we're going to be veering away from using open banking in the future. It's there to stay from my perspective, from my departments. Obviously, we're open to evolutions in terms of bolt-ons or newer versions of the kind of open banking dashboards that become available to us. For example, we're looking at something at the moment like just a financial health indicator, which is new to me for my chosen supplier, which can very quickly, from a date range, give me a 1 to 10 financial health indicator of the customer, which you could then match to maybe a hardship calculator in terms of a solution or not that we could offer. So that's still at the early phases, but yeah, I can only see it developing. I can only see that the take-up rates continuing to increase, and us using functionalities more as they develop.
Okay. And any kind of new additions and innovations that you see coming around the corner, Angus, from an open banking perspective that can help enable connections? Because I think that's the real sticking point is for people to really see how it can work best for their business. So I don't know, if it's a bit of a tough question, but
No, it's a good question. The future is already here. It's just not evenly distributed. Is one of my favorite sayings. So as an OB credit reference agency, our main job is that OB consent journey to consumers, and then analysing the data and providing scores. Just as was described by Tom, that greatly simplify the decision making for the agent or the collections business. The future of open banking includes payments. We already provide OB payments to some big names, including Admiral, who use it for consumers who want to pay back loans early via an instant low-cost method. And payments is a whole area. We've got instant payments, a payment which can be dated in the near future, a recurring payment, and very soon you'll be able to have variable payments. So you'll be able to have ongoing assessment of a person's affordability and take just the right amount from their account to honour their debt, either as a standing order, agreed stream of payments. And for some situations, there's variable payments as well. So yeah, that's exists today, and we've deployed it with some of our larger clients.
Okay. And similar question for you, obviously, Andrew.
Yeah, I would echo what Tom and Angus have said. I think there's particular parts of the insights that I think are going to be very, very useful, in particular persistent debt. So with open banking, obviously you're accessing the customer's current account, and through that data you're able to see if they're in their overdraft, how long they're in their overdraft for, and quite easily work out for the FCA's definition of persistent debt whether they're on persistent debt and use that information in the right way. And I agree, I'm very excited about open banking payments. I think we will see a lot of lenders potentially utilise open banking payments maybe before they use open banking affordability, because you will see customers behave whereby they wouldn't use open banking to pre-populate the budgets, but they would use open banking payments. And I think that the flexibility open banking's payments gives you, especially in a collections environment, I think there's definitely more of a value exchange for open banking payments in collections than lending, without a doubt. So that sort of evens things up, I think, in the value exchange. But I think the future payments is important, because in our industry, we do enter arrangements where it's a promise to pay and it's on goodwill. Whereas in UCAT payments, you can add a bit of security and certainty for both parties to make sure that promise to pay is fulfilled. So that is something that we will see, I think, if not this year, certainly next year, more lenders choosing that option within their collections journey.
Yeah, I think that's really interesting about that, the payment angle. I think it's just the industry learning about those changes and hooking into them and seeing how it can best work for their industry. So it'd be really interesting to see how that develops. Is another question: can open banking data be successfully used to drive right customer outcomes for those in financial difficulty? I guess it's a similar question before, but any thoughts on that, Angus?
So we're specifically looking at the vulnerable customer segment.
Yeah.
Well, I guess it's we've already talked about how you can automate the request for information, how you can automate the I&E, and we've just talked about automating the collection of the payments themselves. I guess you can start to write business rules for people who are who are vulnerable. So one of the indicators that we provide is how many times has a person been in unarranged overdraft, how many days per month and days in total over spans of years. So all of the things that you could do if you had more time, or if your agents had more time, you can write to the APIs and perform those operations right in the time that it takes to speak to the person. And so I think you'll basically, if you're interested in layering in extra protections, they're available and you can deploy them.
Okay, and Tom, any thoughts from you?
Well, yeah, I mean, in terms of, I think I may have already maybe discussed some of the benefits that we've seen in terms of offering affordable and sustainable solutions, and the improvements that we've recognised using the automated affordability assessment from the true transactional data versus the manual form. Interestingly, we've seen an increase of around 7 to 8% as well in terms of our kept rates from the solutions that have been offered, that we're tracking from the automated solution versus the manual. So without doubt, I mean, it's been in place within my business for nearly 2 years now, and it's been consistently higher kept rate, high return to order rate, and a lower rate in terms of repeat arrears customers. So yeah, I can only speak from my personal experience, but it's without doubt driven more affordable solutions that have a higher propensity to keep.
That's a nice way of articulating it. Can you keep evolving your processes using OB to keep driving up that higher kept rate?
Yeah, exactly. We've had a question come in, and it's I'll see who's up for taking this. So, how do you provide assurance that open banking data is accurate without lengthening time spent reviewing information pushed through from open banking request?
I'll take that one if you want, Colin.
You all right with that? Yeah.
So I guess if we think back to March when the FCA published their tailored support guidance, I think it was probably the first time we got a bit of a view from the FCA around digital I&Es and open banking within that. And they give some observations in there around sludge effects, sludge techniques that they saw on some I&Es that they didn't quite like. And I think what they were very keen for, which again with our solution we've built it in, is that even when a consumer uses open banking, they still get the opportunity to review that data and amend that data. which, if you think about it, for a lot of consumers, they may have just had a very recent change in circumstances. So that open banking data, some of it could be out of date. So it gives the consumer the opportunity to do that. I think from a lender risk appetite perspective, it does mitigate that risk. It allows the customers, and we're able to sort of track how often do consumers change their budget after they've used open banking, and it's probably around 35% of all I&Es completed where the customer will make some amends to it. But in terms of what those amends are, it's more reducing expenditure rather than increasing it, or them trying to gamify the process. Because for a lot of consumers, what they're trying to do is they've got a really good true representation of their budget right now, and they can visualize that. But they're looking to future plan their affordability and their budget to recognise the circumstance that they're in. So it allows the customers to do that and almost use it as an action plan to help them ultimately make repayments to their debts and become debt free.
Right.
Just to add to that, we have that functionality, and it's used quite often, to be honest with you. So we'll get a snapshot from a time frame selected within the affordability assessment, but quite often that could include one-off expenditures that isn't going to be continuing in the future months. So when our customers view that and we have discussions around that, quite often we will allow our customers to amend the income and expenditure to make it more accurate when that situation occurs. So that's a really good tool that again is utilised quite a lot of the time.
Cool. Anything to add, Angus?
No, I'd echo that. I mean, it's nobody wants to go through all of their receipts and write out and add up all of their work, and nobody wants to go back. And it's tricky for people who are paid by multiple sources to do all that work. But if it's done for you automatically via OB, then you have the more valuable conversation about what are we going to do in the future together.
Okay, cool. Looking ahead, it'd be good to get everybody's view on this. So do we think open banking is going to be embedded into collections process, say over the next, let's say 3 years? Anybody thoughts on that? I know you're obviously using it already, Tom, but what do you think about collections as an industry embracing it a bit more? Andrew, I guess you could start.
Yeah, I mean, I think what's starting to happen now, again, using lending as an example, there's a lot more case studies coming out in the market now on the consumer and the lender benefits, and we're still a little bit behind the curve in collections. But having dialogue like this with an audience and having someone like Tom, who's got first-hand experience of this, rather than a technology company, an open banking provider, utilizing open banking, they can hear it firsthand. And I think once we have more of these conversations and more case studies come out, I think the adoption rate across the industry in terms of offerings to their customers will increase. Like I mentioned before, there's a lot of RFPs out there, so it is happening. It's took a while to happen, and I think it will continue to happen as we go on. I think there's certain sectors that are probably leading the way, probably more so financial services, high street banks, building societies, challenger banks who have open banking implemented already, and the functionality and the technology is there for a customer to not speak to their lender, use open banking to understand their affordability and offer a payment arrangement, and for that arrangement to be accepted without that lender having to speak to that customer. I think having open banking payments bolted on at the end then allows those customers to really have an end-to-end digital journey and make that payment. I think for some lenders, they'll probably say, and Tom may say that now, we're there, it's embedded. There's not really much more we can do to embed it. But maybe some more, the debt collections agencies, the debt purchases, we hopefully will start to see them start using open banking like the financial services organisations are currently.
Yeah, I think the tech-rich firms, so a lot of the buy now, pay laters are using OB already to have their own step in collection. Before they would hand off to a debt collection agency, and then they can control an automated, branded experience. So we're seeing a lot of that, and obviously that's a very high growth sector. I think, yes, you can say that there's a handful of companies using it now in debt collection. It's very common in lending. I think it'll be common in debt collection in 2 to 3 years, and in 5 years, it'll be just the way it's done.
Mm-hmm. Okay. Any thoughts from you, Tom?
Well, I can only speak from my own personal experience, which I have done, which has been a very positive journey for me so far and our business. So I see no reason why it won't grow in the industry.
Yeah. Interesting. No, it's really good. I'd like to put a call to action out there from some of these companies who are having successes like Tom, because it'd be really good to kind of hear more of these examples. I'm not pushing open banking as a gender at all, but I think the more we can learn from each other in terms of moving that process forward would be really excellent. So just in summary, I think it'd be really good to I don't know, get your thoughts, Andrew, on whether there's any particular elements and innovations that you can see with open banking. I know we mentioned payments, but anything else that you would like to make a prediction on that would kind of help enhance the messaging and maybe get that magic buy-in from the collections industry a bit more?
I think what we've learned is that you're on a journey with open banking and embedding that in your process and getting the consent rates that you want for it to have a good return on investment. I think one of the areas that we realise is very important is getting staff bought in on this process, because if you speak to staff, they're consumers at the end of the day, and they will have the same reservations as some consumers have around open banking. And the staff play a very key role in this and making it successful, in terms of they will get through our solution, they get the opportunity to talk to the customer before they send them their open banking workflow. And those 5 minutes are absolutely key in terms of positioning what open banking is. And I think a lot of people, a lot of customers, when you speak to them, probably haven't realised that they've already used open banking in one shape or form or the other. It could be something like the bank at Lloyd's, and they can see the NatWest account in their Lloyd's app. They're paying their credit cards on Lloyd's via open banking payments. And I think if you position using other examples of open banking, that then is a bit of a light bulb moment for a lot of consumers, and you get that trust and that buy-in. I think the other thing as well is, I think for a lot of lenders, affordability assessments are very high on their conduct risk agendas. They realise that historically that the staff may have not had the best system to do affordability assessments on. They haven't probably been given the training that they should have had. And I think from an open banking perspective, and then just a digital I&E perspective, it does allow lenders to sort of de-risk themselves from having those conversations and get a more accurate reflection of a customer's affordability through open banking. And again, what we've also seen as well with regards to the data coming back, and you've got a debt advisor who gets the opportunity to review that data rather than doing the full process themselves. Because when you listen to telephone I&E conversations, it is very transactional. It is, and sometimes you might have caught the customer at the supermarket at the checkout when you're trying to have those conversations, or they haven't had time to prepare and get all the information so they can have an accurate conversation with the agent. So it reduces the occurrences of that, and it allows agents to review someone's affordability and then have a conversation with them. And what the feedback that we've had from our lender clients is that having that process in has seen quite a significant improvement in QA scores, which is obviously leads to better outcomes. So less calls being scored as detrimental, less calls being scored as high risk. So if you look at an overall view, there is benefits for the customer, there's benefits for the lender, and there's benefits for the agents as well.
Brilliant. Okay, and just quickly, because we're conscious of time, Angus, do you want to add to that at all?
I think absolutely nailed it there. I mean, it's about redesigning your process. I mean, some of our audience might be seeing some of the new debt collection agencies coming through, very, very customer centric, using open banking for what it is, a tool to automate part of their process. And I think that if you look at it in that way and you explain to your customers what the value exchange is, that you're going to save them some time, that you're still going to have that high quality conversation, I think it's just about making it a better service overall. And we've had some clients who've had 5-star reviews for 60 percent of their customers, nobody wants to have these difficult conversations, but you've got that many people saying, yes, this was a 5-star service. That's a really nice way to interact with folk.
No worries. Brilliant. Excellent. Well, we're more or less dead on time now. So, really great to hear all of those views. As I've mentioned, call to action. If anybody can, has an example of open banking, we're really keen to cover this, but also other technology as well. We're running an event on the 4th of November called the Credit and Collections Technology Think Tank. It's ahead of our awards. It's a face-to-face event at the Midland Hotel in Manchester. Sorry for the big plug, but it'd be really good to have some examples at that event and talking about it, so we can hear the lending and collection side on that. But let me round up and say big thanks to Tom for his thoughts, Angus as well, and obviously Andrew persisting with his technology there.
Yeah.
That was really good. And obviously thank Paylink Solutions for sponsoring this session. Thanks to everybody who's joined us as well, taking part in the panel and the questions as well. The opinion poll questions that we had. We're now going to take a break for just under 20 minutes. We'll be back at 1 p.m. and we're going to talk on our final session, looking at business transformation. So if anybody who hasn't registered for that, have a look at our links within the area that we've got on the site, then get yourself added to that now. But I'll round up and say thank you and goodbye. Thanks, everybody. Cheers. Bye.
Thanks, Colin.